Hey everybody, you guys hear me okay? Varun. Oh, Varun. Just love to pop in just to pull my leg. What's up? What's up, everyone? What's up, Dave, Rose, June? How's everybody doing this afternoon? Quite a hectic day. Hectic day. Should be up on YouTube. No one else? No one else wants to say hello to me? See how it is. Elliot, I'm happy to answer your question. Just make sure you say hello. What's up, guys? Guys and gals, hope everyone survived today's trading session. It was a really crazy one. So let's talk about it. All right. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. We did not do an afternoon meeting yesterday because Brant was on conversations with a pro trader with Greta. Seems to kind of be becoming our new normal on Wednesdays. But between yesterday and today, I got into Palantir, Bank of America, Roblox. I got Palantir on there twice. Penn, KRE, Unity. So started to build into some longs. I see the error I made. One of those Palantirs is supposed to be a Pinterest. Whoops. Let's get that changed real quick so everyone has the appropriate disclosure. It's tough sometimes when I'm missing a symbol in here and I'm like looking at my light speed because I manually put this in every day and I'm like going through every single thing that's still on the spreadsheet with every single on the PowerPoint with every position that I'm still in. I'm like matching them one by one. I'm like, okay, that one's there, that one's there, that one's there. Oh, that one's missing. That's the one. So sometimes it takes me a couple of minutes, but we are all compliant. Um, all right, let's jump in and let's talk about today's trading session. Hopefully the YouTube sounds good. See any messages in there? Yeah, so the S&P closed exactly flat. The Q's closed up 0.25%, and the Russell closed down 0.5%. So usually when you see the Russell down and the Q's up, it means you got poor breath. And that's what you got. So you got the S&P pretty much flat, but it's on a day where I'm just totally guessing. I would guess that the average stock is down and not up, even with the S&P closing pretty much exactly flat. This was an important trading session today. The Bulls really had an opportunity to regain some of the control that they lost, and they dropped the ball. Market tried to be strong early on. CPI came out at 830. The month-over-month number was in line. The year-over-year number was within the expected range, but really tenth below what the expectations actually were. I think the month-over-month might be a little bit more important. So more or less, the CPI came in line, which for a lot of this market over the course of this year would actually mean that we would move higher. And that's not what happened today. The initial move higher, I know in my head, my thought process, I was very nervous about this CPI. I thought that this was going to be potentially the first CPI that came in above expectations. We all knew that there was going to be an uptick on the year over year, and that's normal as a year ago rolls off. Um, which is when we had our actual peak inflation, like all July last year. So that begins to kind of roll off. So everyone was expecting that we would see a little bit of an uptick in the year over year. They wanted to see core come down, which it did come down a little bit still on that year over year number. Uh, but pretty much everything was in line. So my initial thought process as someone who was particularly concerned about this CPI was that, oh, okay, well, we got through this and we weren't, really hot compared to expectations. So let's see if Bulls can actually regain some control. And the levels we discussed on the upside were 451, which we did breach. But the more important levels that I'm continuing to pay attention to, and I'm really not going to get bullish unless we can recapture those levels, or unless we sell off very heavily. Um, I'm still looking at this August 4th high and this August 2nd high. So great start getting above 450. If we could have been strong enough to really get above the August 4th high all in one day today, that would be impressive, but not impossible. I thought it might take a couple of days to get there if we closed well today, but we totally dropped the ball. At least the Bulls did. And we rolled over very hard after an initial upside push to close, really weak. We still held 445, which is the low for the last couple days. But the more time that we spend down here testing 445, these weak closes, especially the fact that they sold this CPI event. I mean, I know the S&P closed flat, but in my book, they sold the CPI event, especially because we were gapping up. The more time we spend testing this 445, the more time we spend below that 8 and 21 EMA, the more bearish technically this market becomes. And I've been saying it pretty much since the top. You know, uh, August tends to be weak seasonally. We just went through this period where January to end of July was the strongest January to end of July period for the NASDAQ in history. I was worried about this earnings season. And it's funny because we spent the first like 2/3 of the earnings season not playing out according to my thesis. My thesis for this earnings season was mixed reports would get sold. And that has generally been true. It's just that there weren't many mixed reports, especially early on. The reports they tended to be excellent. And I think it actually helped hold the market up a little bit more. But the Fitch downgrade came in, interest rates have been moving up, dollar got stronger. We know what sentiment and positioning look like. They got pretty cooked to the upside. A nice volatile day like today potentially helps to loosen us up a little bit as well, which could create more systematic selling. But I don't think the VIX had too much of an uptick today. Um, there's lots to be concerned about in the very short run. And what I've been saying, since the beginning of this month when we were still at 457 or so in the SPYs, is it that unreasonable to get a 5% pullback on the market? 5% pullback would bring us to about 435. Historically, and obviously the market never needs to follow averages or history. Historically, you get a pullback that's 5% or between 5 and 10% in the market every 8 months. So seeing one or two of those a year is not unusual. We actually already had one of those pullbacks in February of this year. Seeing a second one, um, 7 months later, 6 months later, whatever it is, would not be unusual as well, and makes sense after such a big run. I mean, there's a lot to be concerned about. I'm still not like a full blown bear, but it doesn't mean that I can't have some shorts on or be a little more cautious on my longs in a period of time where it just makes logical sense for us to pull back, and the technicals have been confirming it. The technicals have been confirming it ever since we had this day to take notice of back here on July 27th. So I would still say that big picture, the market is not bearish. I would describe it as neutral at this point. We've clearly broken our big uptrend that we've had for months here since we broke out of SPX 4200, but we haven't really overly confirmed like that we've gone into a big downtrend. And as I've said in the past, breaking an uptrend does not necessarily mean that you're automatically in a downtrend. It could mean that you fully reverse and go into a downtrend, or it could just mean that you go into a range bound market. We had that really big range for a couple of months back here in April and May before we actually broke out. So is it that insane after the run that we've had to, get a 5% pullback or get a market that wants to, maybe not become bearish but not continue higher? I don't think that is unreasonable at all. And I'm looking to see if 445 can be supported. I'm looking to see if the market can recapture some levels on the upside. I tend to prefer to be bullish. So, I want it, I want it showed to me, but the market's not showing it to me. We had a real opportunity today with the CPI coming in line for the bears to not be able to push us further, for bulls to take a sigh of relief and push us up and recapture some levels. And not only did we fail to do that, but we closed on lows. So this market's not looking good. There are some charts out there that are still holding in, that are still plenty intact. We could probably take a look at like a Google as example. Google here looks just fine still, even though it had a weak close. But there's others out there that are, becoming a little bit more concerning. This Apple is becoming more concerning as it goes sideways here, as that ADMA begins to catch up, as you get an inside day, that this thing might weaken out and give a leg down. Maybe it works its way back to $170, which once again would not be insane if Apple went to 170 bucks. It was just in the beginning of this year, Apple was at 125. Massive, massive company going from 125 to 197. Is a pullback to 170 really that unreasonable? Maybe even a pullback beyond that? I don't think so. The 200 day in Apple is still all the way down at 160 bucks. But for sure, you can't look at this Apple chart and be bullish and excited right now. It's creating a bearish consolidation. The ADMA is catching up inside day to day, closing at lows. So, there's plenty of charts out there that are starting to not look good. And the growth names, which, highest beta stocks that are out there, it makes sense that they had the biggest runs higher will give the biggest pullbacks. Some of those at this point have started to give pretty decent pullbacks on a percentage basis and still look terrible, or not good, at least. Palantir is one that comes to mind. I thought that this was a pretty good earnings report up there, $1 billion buyback, but with our kind of change of the guard here as we have approached a new market environment so far in the month of August. They sold it off like they've sold off a bunch of decent reports since August has hit. And then today we got this kind of bearish looking inside day in front of $15 support after that negative Maribozu. There's still a decent amount of extension here. This thing could give an inside and up. It could give an inside up if the market wants to be supportive and still hold SPY 445. And if it's able to do that, it'll look more bullish. But an inside day after a negative Maribozu tends to be more of a continuation thing than a reversal. So absolutely, Palantir could hold 15. Spy could hold 445. You could get an inside day and up in Palantir, and I'm just using Palantir as an example. You can type up almost any growth stock right now. But for the moment, this thing is not looking good, and I say that as someone who is long, appropriately long. I've actually traded this thing really well over the course of the last three trading sessions. I don't think I'm down any money in it from the last 3 days, which is pretty good considering what's it doing, what it's doing here. You can look at other names, Penn selling that earnings report fully filled the gap today. Did not expect that all the way down to $25. Or Roblox is a newer one that I've been looking at since the earnings report. Traded it yesterday, kept a bit of a position, got upgraded this morning, but you can't say this chart looks good. It's just extended. I want to see if I can get an extension bounce back to 32, $33, something like that, which, did a little bit of that today. I heard Pat mention Pinterest. Yeah, Pinterest's not looking great, breaking some support levels. Had this like hammerish type doji here, couldn't bounce at all off of it. Gave an inside day yesterday. Today it's given the inside and down, losing 26 bucks. Not looking great. You could look at Upstart. This thing is destroyed. They tried to bounce this thing back a little bit today. I wanted to look for 30 bucks to see if I get heavy selling in the beginning of the day to 30, where it would just be so extended that I could take a stab at it to the long side. But these charts have had incredible runs. I mean, you know, $12 to $75 back to $32. It's hard to say, is it really cheap because it just came from 75, or is it still really expensive because it just came from 12? Hard to say. So the market's normalizing a little bit after we've been on just an incredible bull run, and it just is what it is. You got to be able to manage your risk, and especially if you both day trade and try to manage your portfolio positions at the same time, which is what I do, you have to be flexible enough to say, okay, the market's telling me it needs to have a pullback, so I want to be patient on building back into my longs. I want to, get some shorts on my books to act as a hedge. And I've certainly given back, just talking my own book, certainly given back some P&L in SoFi, right? I was almost out of SoFi as it approached 12 bucks, which has really been my target. I didn't get fully out. I've been slowly building back in as this thing has come all the way down now to below 90, sorry, below 9. I've absolutely given back some P&L of what I've made since the $4.50 low in this position that I'm involved in. But at the same time, that's being mitigated a little bit by the fact that I got really heavy in T Triple Q short, that I had a pretty decent position in U Pro short. So I was short the market. I wasn't afraid to, do it with massive size, but not afraid to get short Meta, which has actually paid me really well, despite the fact that it hasn't pulled back that much and the chart looks pretty bullish. Or shorting, Microsoft up in at 333 or 334 or whatever that initial price was. Shorting Tesla, in the upper 260s. So I know for myself, it's been a really good bull run for the positions that I've been in, and I'm specifically just following my game plan. I'm piecing out on these things on the way up. Just using SoFi as an example, I remember loading the boat in SoFi at $4.50 when Wedbush downgraded it on that day, and I've had a $12 price target on it. I did not expect when I was buying SoFi at 450 that it was basically going to be able to get to 12 within 2 months or so of buying that position. That's a really, really big move. But I followed my game plan kind of throughout, getting lighter and lighter and lighter and lighter, almost getting out. And then on the pullback, beginning to get heavier and heavier and heavier again, though staying reasonable with it. And at the same time as I'm giving back some money there, making some money in the short positions that I put on, and even a little bit of money in those covered calls that I sold. Who would have thought? Um, so that's just kind of been my MO on this market as I wait and watch, because to me the pullback makes plenty of sense. I'm not looking for a move to, 410, 415 in the spies, though it could happen. It's not really what I'm looking for at the moment. I'll take it day by day. The market at this point I would consider to be neutral. It has the potential to turn more bearish on a break of 445 and a close below 445. And then at a certain point, if we can really break down further here, we'll be looking at our extension rules that we were so successful with on the way up, on the way down, right? We're so successful with our extension rules on the way up. I remember, specifically, I think getting short. Did I get short there? Definitely getting short here. I remember this one. I think I got in short earlier too. Might have caught these little, just extension shorts like here and here on these little pullbacks at the end of May. And then the bigger one that I remember, the bigger call, because I did really call it extremely well to give myself a pat on the back, was back here on, June 15th. Market stayed bullish. Our thought process stayed bullish. It was just, wow, look how extended we are. Let's piece out of some of these longs. Let's short some of these index ETFs to hedge. For what? For a pullback to equilibrium, for a pullback that retests some levels, 430. Then we'll see if we can pivot. And it was the same deal, piecing out of those shorts on the way down and piecing into those longs on the way up. And it was the exact same thing back here on the 19th for me. Not super aggressive, but we got a little bit extended. Okay, let me, short. I think it was the Qs in particular. I'm looking at the spies, but the Qs in particular on the way up got more extended. So now that I remember, I I do remember now, getting these shorts on at the end of May also, and kind of getting that pullback, and then mid June and getting that pullback, and then was in here also, and kind of getting like that quick. I think I got that quick 2 day pullback. Is it here? I don't exactly remember. And then really laying into it at um so the Qs and the spies at different highs. That's what's throwing me off as I look at these charts historically. Um but yeah, laying into the Qs to the short side here because of the extension, and then laying into the Qs again in this area here at the end of July, because the market environment was starting to change and it looked like we were going to get a much bigger pullback. Um, and that's where we're at. And the game plan is honestly working really well. Outside of one mistake I've made on one trade, one position that I'm in, I couldn't be happier with how my P&L has handled this pullback as someone who tends to be to the long side of the market. And I recognize that we could break here, and we're looking like we're setting up to break here to go even lower. So 445, pay attention to your key daily chart levels. We start losing 445. You don't have much extension here. These moving averages are beginning to cross. that could be the signal that brings us down to 435 to 440, or support holds and the bulls come back in. We have another strong Friday tomorrow because Fridays have been strong all year and we work our way up. I'm not a huge seasonality guy. I don't think just because we've had strong Fridays this year means we have to have strong Fridays the rest of the year. It certainly was not that way. If you remember the beginning of 2022, I think every Friday for the first half of 2022 was red except for one or two of them. It was like really insane. And then that, kind of died out. But August does tend to be a seasonally weak month. And we're also starting to get into the doldrums of August, which they do say never short a boring market. But, the back half of August tends to have a little less liquidity. Um, Big market players and participants like to go on vacation in August, beginning of September. So it's really once earnings season here ends in August, which we're basically done with it at this point. It's like probably starting tomorrow now that we got through CPI, unless we have a big technical break tomorrow, which could happen. Probably starting tomorrow, or if not starting next week. You usually get really slow price action in the back half of August and the first half of September as people just they don't care about the market as much and they're trying to enjoy their summer, which I'm all for that. And then right after that holiday in the beginning of September, what is that, Labor Day? That's usually when things begin to ramp up a little bit. Really, the week after that Labor Day weekend is when things usually ramp up a little bit. So, yeah, knowing seasonality is important, even if it's no guarantee of the future. And that's pretty much all I got. So happy to take a look at what you guys have or any questions that you guys have. First thing I'm seeing is from Elliot. What are your thoughts? We keep having these sell-offs at like 10:30, causing my positions to reverse and generally stop me out. I've been trying to hold 50 to 75% of my stock um, for a bigger trend move, but I haven't been getting them recently. I am thinking that until the market proves it can keep a long trend, that I should just not be too greedy on any of the longs unless they have a news piece attached to it. Yeah, for sure, Elliot. So, I totally agree with the thought process. We need to, when we're building out our game plans, keep in mind the market environment that we're in. And I remember, and I probably was a little bit late to doing that afternoon meeting, but I remember traders were getting frustrated in this April May period. This April May period was a lot of actually what we've seen here over the course of the last few days. There was a lot of days in that April May consolidation where we were like really weak in the beginning of the day and then we would reverse midday and potentially close higher, sometimes not. And I do think that those intraday reversals, I don't ever remember seeing as many midday reversals in my career happening as often on like a percentage basis as they have been as they have been this year. And I think that that's just because the dynamics of the market have changed with the advent and wide usage of 0 DTE and 1 DTE options and everything that Ben was trying to wrap his head around earlier. Ben Conn was trying to wrap his head around earlier from Chem that he likes to talk about and Bill K so eloquently dumbed down for us to be able to understand better. Um, I think that that's helped cause a lot of those midday reversals. And I remember people were really not happy in the April to May period. For me, it was actually a really good period for the way that I tend to approach markets. I don't mind ranges at all. I don't mind sideways markets at all. I tend to do well in them. Um, with kind of how I trade. But if everyone remembers in April and May, what was the constant thing that we were talking about? Breakouts don't work. Remember how many afternoon meetings do we talk about in April and May of this year? Breakouts, they don't work. I'm trying to buy breakouts and they don't work. Well, guess what? In June and July, they worked. Breakouts all of a sudden were working great. And that's great. I love when breakouts and breakdowns work because that's like the easiest trade that there is. It's the easiest trade. It's the first trade that I try to teach to a new trader. It's the first class that's in my training program class, and that's for a reason. It's simple. It's simple to understand. It's simple to execute. It's simple to understand how to manage your risk, and it's a great intro trade for learning how to manage risk and how to game plan reward. So obviously, I love a market environment where the most basic type of trade that I like to teach and someone who's brand new to the business can implement with success, and it can be really conducive to the learning period. That happened in all June and July. It did not happen in April and at least the first half of May when we were going through that consolidation period. And I remember doing that afternoon meeting back in May and talking about kind of what your question here is, Elliot, about the game plan adjustments that we need to be able to have for success in this type of environment. And for me, a lot of what I do, I love entering new positions for breakouts. But a lot of what I do and a lot of what makes me money is a long game of building into and building out of positions based on moves. So if I've already got positions on that I can give wide room to because I'm already a lot in the money because of a breakout from, a while ago and now it's range bound, in this type of environment here in April and May, I can just do that more kind of quantitative selling and buying and range approach that I like to do. And in that type of environment here, like what we had in April and May, when everyone's getting frustrated because they're getting stopped out on the first half of the day on heavy selling, and then they don't have anything on the long side in the second half of the day because they got stopped out of everything. For me, it's great because I'm just piecing back into longs that I've already sold. I'm taking risk back in longs that I've already sold, and then selling them again when they go up. And I basically did that for 2 months in April and May, and it was great. Every day I would come in and I would just kind of work those ranges throughout the trading session, build out of things that went up, build into things as they go down, and kind of get paid for it. This environment here in August has actually been in some ways even better because I'm doing it on a scale where I'm doing it with longs and shorts at the same time. So for me, the fact that we had 3 trading sessions in a row, basically where there were intraday reversals, has been excellent for my approach. I'm just talking about my approach and hoping that you can find a way to adapt some of what I'm doing to your own trading. But these last 3 days, this is great. 2 days ago, we sell off in the beginning of the day. So what am I doing here? All the swing positions that you see that I'm in, the shorts, I'm covering and I'm covering and I'm covering and I'm covering. And the longs, I'm buying and I'm buying. And again, buying back, not adding new risk, not starting new positions. I'm buying back, I'm buying back, I'm buying back. Then the second half of the day happens. I'm reshorting, I'm reshorting, I'm reshorting, I'm reshorting, I'm reshorting, and I'm selling and I'm selling and I'm selling and I'm selling. And then the next day happens and I rinse and repeat, right? It's the exact same thing. I'm buying incrementally all the way down on the longs that I just sold up in the afternoon on the way before. I'm covering incrementally all the way down on my shorts that I had just reshorted in the afternoon before. I get the V reversal again and do the exact same thing. Reshorting on the way up, selling on the way up, and then into the close, the exact opposite again. So I was covering shorts all into the close, getting pretty light on my shorts into the close again yesterday. Buying back on my longs, I was like a little uncomfortable actually with how much I was leaning to the long side when I was doing my aftermarket research yesterday and kind of aftermarket review because I was like, oof, I, wasn't really planning from a portfolio perspective to get back into, Penn, Roblox, and Palantir necessarily and keep them, but I decided to on all 3 of those positions. So it was a little bit heavy to the long side. And then, Penn obviously with the double downgrade was a little bit of a disaster. But for everything else, I get this great gap up this morning on CPI, and then it became the exact same thing again this morning. The whole way up. Because we never I'll blow out of my shorts if we can recapture that August 2nd, August 4th high, and we aren't. So I'm just, reshorting all the way on the way up and I'm rebuying all the way down. So now think about it, right? Let's say that the market bulls win, which I think will happen eventually. I don't know what'll happen until then, but eventually I think they're going to win. Let's say the market bulls win and we get above the August 4th high, the August 2nd high, and I blow out my shorts. Even if I blow out my shorts at, you know, the prices that I got into them at, which is not really how I trade, or at my trailing stop or at my original stop loss, whatever it is, I'm making money on all of them no matter what. Because even if it goes all the way back to my original price or my original stop loss, and I give back some money and I blow myself out of those positions, I still pocketed everything that I just discussed. All the down move covering, the reshorting, the down move covering, the reshorting, the down move covering, the reshorting, the down move covering, and then tomorrow, let's just say hypothetically, we have a massive day for whatever reason, we break all the way up. I stop myself out of those positions. I'll still have made money in them, and then the longs that I've begun to build back into, I'll absolutely crush, um, which is just great. Now, from a new trade perspective, it's a little bit more difficult because all of a sudden the breakouts aren't working anymore. We're back to that April May period. You're not buying breakouts and getting fantastic follow through. It has been earnings season, so there have been individual earnings names. Though this August, some of these earnings names have been tough. There have been individual earnings names similar to actually the end of April and the beginning of May when we were in earnings season, but we were range bound and we were able to find earnings names every day to be able to focus on. You can find those individual names and you can still have a greedier game plan because you recognize that it's trading on earnings and you can get more follow through. But if you're trading anything that's going to be a little bit more market correlated, um, I would say that today it probably still would have made sense to be greedier and give back a lot of profit because we had a CPI day and we were really strong in the beginning of the day, so you could get a lot more follow through. But if it wasn't for that event that occurred, then I think that you want to go back to more of like the April May game plan where you are being much less greedy on, how do we book profit on trades that are working? Broadly trimming and trailing. Trimming and or trailing, I guess I should say. Well, in a trending market in June, July, you want to do a lot more trailing and a lot less trimming. In a market like April and May, you want to do a lot more trimming and a lot less trailing. So you create the game plan, you build that game plan around the market environment that we're currently in. And now that we've come here into August and our immediate uptrend line has broken and we've had these, bearish days to take notice of, it's been a signal to go back to doing a lot more trimming and a lot less trailing. And if you can get good initial positions on your books somehow, whether it's started as an earnings name or whatever, where you got a breakout and then you keep that position to try to work it, then work it. Let the market go sideways for 2 months. Have your positions on where you're selling every time there's a bounce and rebuying every time it sells off. For me, it's a great feeling, and I don't want it to ever be for you guys, obviously, where this happens, but it's kind of a good feeling where if I'm already in a position, and I can see that if I was trading it as a new trade that day, my stop just would have triggered and I just would have gotten stopped out. But instead, because it's not a new position for me, it's a bit bigger picture. I actually sometimes am coming in and buying in spots where technically I might normally get stopped out. And then when we're getting these midday reversals, not only did I not get stopped out, but now no one's got a position in the name and it's moving in my favor and I'm booking profit on it. So that's kind of the broad thought process. Market adjustments when the market changes character, it's always the most difficult time for traders. It's always the most difficult time. And I see the numbers broadly. I'm not going into everybody's account every day and looking at how everyone did yesterday or whatever. But I broadly see the numbers on how the team is doing. I know it's very clear that we June July were great for us overall as a team. But look at what the market did. It was an easy environment. You buy your breakout, market gets extended. Okay, market gets extended. We're $10 extended from the queues, and we book some profit. Rebuy it on the pullback, or even get a little nifty and flip to the short side on this degree of extension. And then I know when we get into an environment like this in August, even though I think as a team overall, as far as communication goes, we could not have done a better job for this pullback. We could not have done a better job about it. I know that the P&L tends to suffer a little bit in this. And for me, because I tend to be long, I'm like so happy to almost not even just like to not give back profit for me on a pullback that's been, $15 in the spies so far or whatever, that's something that actually gets me super excited because I also tend to make the most amount of P&L in a June, July. I can make money in that April, May doing what I described, but maybe it's not as great. Um, I make the most in this period, and then I tend to give back some P&L in the broader pullbacks. So I know that if I can survive a pullback like this and like overall not give back any P&L, I'm setting myself up for when and if we do get another leg at a certain point higher or the market begins to range out to then be able to make like a lot of money for myself. And now I'm ranting a little bit, but that all goes back to what I learned years ago about some of the best traders in the market that I didn't understand when I first learned it. And I only understood as I kind of became a bigger and better trader over the course of years. But I remember hearing, over 10 years ago from some of the best traders at T3 that they would say they make 90% of their money in a given year over the course of like a 2 to 3 month period. And I get it. I get it. It's because if you can just be making little bits of money, pocketing some beer money, as we like to call it and joke around, during those sideways markets and those pullback markets or whatever. But whatever your edge is, and for some people it's on the short side, some people it's on the long side, whatever your real edge is, when the market really lines up with that edge, it's not going to be doing that for 12 months out of 12 months of the year. It might be doing that for 3 months out of the year. So you need to make sure, if you're a trader more like me, who prefers to be the long side, who prefers to be able to buy breakouts over shorting breakdowns, you need to make sure that you crush the June, July period. I know I did. Um, so like because now it's like okay, like I will be plenty happy if August closes and I close the month out flat on the month. Obviously, I want to make money every single month, but if we have a decent pullback month and I'm able to close the month out flat after the P&L that I posted in May, June, July, which was very significant, um, that I'll take that. Because again, that's what I've learned is that most of the best traders really tend to make their big P&L that makes their entire year over the course of a few month period in any given year when the market itself has really, really lined up to their edge. So, what does that leave for you for the other 9 months of the year? Risk management. Risk management is the key to the business because, it's one thing if your edge isn't lined up great to make you a ton of money. It's something completely else when your edge isn't lined up great and you're losing a ton of money because you weren't managing risk properly during the periods of times when it wasn't great. And that's what eventually can cause a lot of traders to fail. It's like, okay, fine, you learn to be able to make money in June and July. Great, that's awesome. I'm pumped. But if you lose more money than you make in June, July, if those are let's say that those are the only two really good months of the entire year, and you crushed them, but the other 10 months where it's a little bit trickier, you don't got good risk management in place, and you give back everything that you've made. Well, now you just worked for an entire year and you didn't make anything. So at the end of the day, and I know I'm speaking really big picture with broad strokes here, but at the end of the day, it always does come down to this math problem of, how am I game planning myself to be able to make more money than I lose when things are really good versus when things are tougher, and how do I adjust my approach as the market environment adjusts? And that last question, that's the hardest thing I find even for really experienced traders. Traders that are really good, who've been profitable, who've been doing this for a while, is the market environment changed and they couldn't change with it and they hurt themselves, which again, it's not, you know, surprising. But we all have periods of times where we take losses, and I know your question wasn't even like, hey, I'm taking losses. Your question was more of, hey, I'm not making as much money as I want. Um, but we all have periods of time where we take losses, trades that we take losses in, days, weeks, or even months that are negative. It's just a matter of what the number looks like there based on your risk management compared to what the number looked like when things were actually working really well. Appreciate the question, Elliot. Love it. Totally love it. Love those types of questions from Dave S. See that some of your short options are expiring soon. What's your opinion experience been for your foray into options, both from both a buying and selling standpoint? It's been a fun learning experience. I'm glad that I've done it. I'm probably not going to continue to do it. I'm probably going to shut down my options access again. I've already paid for the month of August, but now that I've got all the extra registration paperwork and everything completed with T3, I can get it turned on and off at the flip of a switch from the team here. Um, the biggest problem that I ran into, and part of it is still just a learning experience for me. So first of all, I just wasn't consistent enough when I decided to buy puts on earnings, which I said was going to be 100% gambling. It's because I did it entirely because I had a thesis and I wanted to put money behind that thesis. And I think if it was more consistent just in doing it in more names, I would have had better results. Like just as an example, I said it to Pat in the radio this morning or in chat this morning. One of the names that I planned on buying puts into the report was Datadog. And I just didn't do it because by that point I was 0 for 6 on buying puts because I chose these names that ended up having, phenomenal earnings reports. I think that would have evened out a little bit over time. Um, but I only did that very specifically for this earnings season. And that was the main reason even why I turned on options to begin with, was I wanted to test that thesis. As we come out of this earnings season, where my specific thesis was for this earnings season, I don't need to have options on my account anymore. The selling of the covered calls was also an interesting experience. I never would have turned options on my account just to sell covered calls, but it was fun and it put some money in my pocket. I'm assuming, though we'll see, it could still change. I'm assuming that all of the calls that I sold are gonna expire, 100% in my favor. Um, so that's great. It put some money in my pocket, helped also pad the down move a little bit in, S and SoFi that I've been in here as the market has pulled back, made a few bucks in it in Lucid as well. JD though was the interesting one because what I didn't like, and I understand that I could probably come in and do even more with options uh to make up for this. Um, this period right here for JD, I didn't like. What my game plan dictated for me to do was to liquidate my entire position by this high. This high here is 41.95, and then to rebuy that entire position as it approached 40 bucks. Um, and maybe I just need some adjustments to my game plan, or again, I could probably do some things with options on the other side to make up for this. But what ended up happening was I did not liquidate my position in JD because I would have been naked on my calls had I done that. And therefore, I did not make the P&L difference of selling into 42 and rebuying at 40. And the amount of money that I didn't make by doing that is going to be more than the amount of money that I actually sold on those JD calls. And it would have been significantly worse for me if the stock ranged between 40 and 42. Like it's been ranging between 38 and 40. If this thing, that's actually been great for me, because now I'm, able to trade my strategy and I'm able to make money in it. But if this thing, I realized, decided to spend these next few weeks ranging between 40 and 42, it would have ended up costing me a lot of money unless I just liquidated those calls entirely and took the loss on it and then, kind of got back to my strategy between 40 and 42. And that I really did not like. So like it works great for me, and I got nervous with a couple other positions that I don't that the same thing was about to happen. Like with S as an example, I've got $17 calls. So if S really got above 17 and 18's been my target, if S got above 17 and range between 17 and 18 for these couple of weeks, it would have cost me a lot of money in missed profit because I couldn't sell those positions without getting naked. Um, So it's just not worth it to me. Obviously, in this case, this is actually the best case scenario where it worked up 217, which is the strike price on the calls that I sold. Um, so I sold my entire S position at 17, with the exception of the stock that I still had of those calls, which I wouldn't have sold at that price anyway. I only would have sold it above 17, and and then came back down. So I was still able to fully trade my position and still gonna bring in 100% of the premium, most likely, unless something dramatic happens next week. I think S has earnings too. I think I'm holding these into earnings, so it still could change. Um, but unless something dramatic happens, that's actually going to be the best case scenario. But I don't want to risk being in these things for a few weeks, um, while it's stuck in the target range that I have and not making all that money just so that I could make a little bit of premium. It's not worth it to me. Um, so yeah, so I'm gonna shut down options at the end of this month, much to some of your guys' disappointment. I feel like, because I know some of you guys are big options traders, and I'm just not. And I mean, look, the final thing that I would say about it, and I appreciate, because I'm not scrolling down in the chat yet. Probably some of you guys are already potentially writing into the chat about, well, you can adjust your strategy to be able to, buy puts or whatever to kind of make up for that in case you lose your position, so that you're not getting naked or whatever. um and I understand it and I appreciate it. It's just at the end of the day, while I want to continue to learn, that's what I want more than anything, is to continue to learn, and that was one of the biggest reasons why I did this. At the end of the day, I have a very, very strong edge trading equities, and it's been doing really, really well for me, and I've honed that edge over the course of 15 years or whatever in the business at this point, and that's really where my edge is. And it works great. So it's like, on the one hand, I'm a big believer in, on the one hand, don't change what's not broken. On the other hand, learn as much as possible in case what you have breaks, if that makes any sense. Because I've also experienced in my career, and I like to talk about this. Um, Spoke about it somewhat recently. When I first started trading, I learned to trade off tape. I learned to trade all of tape. I could make money all of tape. If you asked me at a certain point in my career in like 2011, if you can only have, level 2 in tape or charts, which would you have? I'm like, I don't need charts. Take that away. Just give me the tape. I can make money just off the tape. Um, that totally disappeared at the end of 2012 and the beginning of 2013. And if I wasn't just a naturally curious person that wants to learn and learn other approaches, I don't know if I would have been able to make the adjustment. And there were a lot of traders that I traded with who failed to make the adjustment and left the business when the tape reading stuff stopped working. Like a lot, like a real lot of traders. Um, and it changed. But I'm still here because when I had a strategy off tape that worked really well for me, I said, "Hey, let me get this book by Brian Shannon, Technical Analysis on Multiple Time Frames, and learn about it." And that's just one example, because there's a lot of examples, and that's what's kept me in the business. So that's kind of where my head's at. I don't really want to fix what isn't broken. I have an edge. It's in trading equities. I've honed that edge over years. It's working really well. But at the same time, I love the experience to learn new things about trading, about markets, that maybe at some future point need to become more of a core of what I do, because of maybe what I do currently stops working at a certain point. You never know. I don't like to think that way, but it's true. So I appreciate the question, Dave. Uh, from Cody, I've been watching futures all week long, and we've consistently grinded higher after the close and selling a gap up the next morning. If the futures trade lower, a gap and go is very possible. Okay, yep, great observation. I think so too. I think that if this market gaps below 445, you got a real issue potentially. Oh boy, that's got a long one for me. Let's do it. 35. Could you take a look at my trade for today? Today I got an Amazon at 940. Inside nut I see here. Using the inside at the 940 inside 5, using the inside 5. I thought Amazon looks very good above 140. Totally agree with me on that. That was the level we had talked about in the morning meeting. So I only sold 30% of my position on my 1-to-1. I added back 10% when I pulled back to 140. Okay, yeah, I remember wanting to see if this 140 could pivot and hold right before I was leaving for the dentist. Um, I thought Amazon looks very good above 140, so I only sold 30. Okay, I already read that part. I added back 10%. I sold that 10% again at highs. Love it. Then the market started to pull back heavily. At 10:45, the Qs pulled back to the 80 MA on the 15. Although I thought it pulled back too much, I think it could still give some bounce. So I added back my 30% of my Amazon at 10:45. I sold at highs at 10:55. Then I got stopped out at 11:20 low. Give me some thought on my trades and those adding. Yeah, sure. So I thought you did great. You had a game plan, you created the game plan, and you stuck with it. Your green, your game plan I would describe as a fairly greedy one, um, which is fine because you're expressing a lot of reasons why you like the trade. The market's really strong. Amazon's relatively strong. Amazon's breaking 140, which is a key level. CPI is on your side. Like, there's a whole lot to like, so you chose to have a greedy game plan. As long as you are fine with that, then everything else is great. I don't think you probably want to have this greedy of a game plan extremely regularly. But sometimes on really good trades, when things feel like they're really lined up, to only sell off 30% of your position and even be rebuying some of that, it can work out really well for you. But it's just as long as you recognize that it's a very greedy game plan and that you're going to use a very greedy game plan only when it calls for you to use a very greedy game plan and not on every single trade that you take, then I think it's great. You also traded Alibaba at 1010. Baba was one of the big winners from the meeting today, $98 level we discussed. You really had to pay for it, but I remember after the first 5 minutes, we called out a long Alibaba off the opening low, which I didn't take because I still got this JD position. Um, that was a great trade, and then it gave this beautiful looking inside 5 and up here that was great. And then Josh called out the 1010 low as a potential pivot. It's probably my least favorite of the three trades just because of the time of day for no other reason. Time of day here 1010, 5 minute, but it is on earnings. It is relatively strong. But sure. So let me see what you have to say here. At 1010, the market was extended. But Bob is an earnings name, so I took small long at 1010. I couldn't cover up my risk. I got stopped out at 1035, then at 11 o'clock. Okay. Then at 11 o'clock, I got back long after seeing that Baba corrected back to the 15-minute ADMA, and at the 5 minute gave a hammer candle. I love how you're combining those two time frames at this time of day. Um, I thought it also shakes out the longs from 1035, could make the stock go up more easily. I sold some at highs and added some back at 130 and I got stopped at 140. Yeah, that's all solid. That's all solid. I wish you were involved in the first two trades. Third trade, fine. You traded it right, you got stopped out. Fourth trade, also fine. Again, I love that you're combining multiple time frames. The only thing I want to caution is to make sure you don't overtrade it. You do need to know when to throw in the towel, which I think everything that you did here was appropriate. But in other circumstances, it may not have been. In this circumstance, I think it was. But I know I've seen from you in the past over trading sometimes in these situations where you kind of keep going back to that same name after it gets a little out of play at a certain point, which I don't think you did here. I think that the trades you took were valid. I just want to repeat that. Just also kind of giving a warning sign because you asked so many questions in the afternoon meeting that I know you're trading really well, and I can, try to throw you a little warning where I think you might need a little warning because you always ask such great, consistent questions, and I wish more people would do the same. So good stuff from Rex. Third question. What would you do when the stock is not getting to your target and the market is about to close? I took Tesla at 145 long. Also, Tesla failed to break lower on the 15-minute bear flag. 145. I see it here. I see it here. It has an inside 15 and out. With higher volume. Okay. The Qs are also kind of bouncing off yesterday's close. I understand the dollar risk was kind of high, so I took a small piece of a long for a scalp. It ticked to 20 cents away from my 1-to-1 at 320, and then I sold off. It turns out I had to close out less than 1-to-1. Yeah, I mean, I think that's just what you got to do. If you take a trade and the buzzer's about to end, your shot clock's about to end, then you got to just liquidate the position. There's nothing else you can do about it. You don't want to swing it because you don't have the profit cushion for it. You couldn't even get 1-to-1. You took a trade and you're just out of time. And risk management at that point dictates that you just close out the position. So that's fine. Appreciate the question. From Eddie Vick, both you and Pat mentioned pins. What's your opinion on a long entry at the daily 200, the daily 200 and weekly 50, betting on a reversal? So I don't think that moving averages are support and resistance as a rule. I think they're squiggly lines. So that'd be the first thing that I would say. The 200-day or any moving average on any time frame, there's pieces of information that I pay attention to along with other pieces of information. So I like pins big picture. I like it fundamentally. I like that it's pulling back here because it gives me the opportunity to get involved at better prices compared to when it was above 30 bucks. But I don't necessarily think that the 200-day is going to be important. I do think that that coincides somewhat with 2450 to 25, which is an important level. So I think you could look at that for a potential, long entry to see if it wants to reverse higher. Um, uh, but I wouldn't necessarily count on it. I would look at it at that spot to begin to game plan something and see what it looks like when it gets there. Hope that helps. From Cold Smoke, the key is being able to identify when the market goes into those phases relatively quickly and adjusting the game plan for sure. But it's very hard. It's very hard. No problem, Elliot. People are seeing Spy instead of JD. I don't know. It's showing pins right now. Yep. Um, Eddie's saying that earnings for me is also number games. Stay small and spread out the risk with more names can improve the results significantly and stay consistent. Yeah, I'm sure. 100%. That's what it's all about. From Leif. Was wondering how you conduct your morning research to decide what you like for the day. Besides looking at some interesting earnings names this week, how many charts do you analyze before 9 a.m. and where are you looking for them? Sure. So, my morning research plan, I'm usually trying to start by 6:30 at the latest, but initially all I'm doing at that time of the day is swing position management. I'm looking at my swing positions that I already have game plans on. I'm seeing what's gapping up and what's gapping down. Seeing if my game plan dictates me doing any pre-market buying or selling, and putting in the bids and offers on my swings per my game plan. My real research kicks off at 7:30 when hopefully Pat is awake and starts to post research. I type up and review the chart of every single stock that gets mentioned in the VTF between 7:30 and 9. Typically 7:30 and 8:30 because 8:30 is when Pat's note gets published and he's usually not posting too much more stock specific news. Sometimes one of you guys are posting an idea. I review every single daily chart of every single stock that gets posted in the VTF every morning. That's a big, big part of my research. I'm looking at what the news is, why it's getting posted in the VTF, in conjunction with the daily chart to see if there's a trade for me. And on probably 90% of them, there's no trade. And then 10% of them, there's potential trade, and I type it into the um, my spreadsheet that I eventually post. Uh, I guess I should take a half step back because the way that I always start is really with with big picture daily chart research of the market itself, the S&P, the Qs, and the IWM. I want to create like that little like few sentences that I put in there before the names that I list. That's really the first thing that I'm trying to do every day. Is all right. How, at least at this time, which might be 7 o'clock in the morning, how are we set the gap? What do the daily chart technicals look like? How should I be thinking as far as a big picture game plan? And I keep that potential big picture game plan in my mind as I'm reviewing every single stock. So I go through every single stock that gets posted in the VTF. And then I also just have a universe of probably 50 stocks that I go back to and I type up almost every day. Um, every single day I'm typing up all the mega cap tech stocks. I'm typing up a bunch of the financials. I'm typing up a bunch of the energy names. And I'm typing up a bunch of growth names, basically. I'm not necessarily looking at airlines and retail names or utilities or healthcares, even if they will come up on my radar. It's usually because one of you guys mentioned it and you brought it to my radar, or because there was news in it that day. And that's a really long process. I do my best to try to read Pat's note in its entirety every day, because that also has a big influence on my big picture game plan. And for me, I find that the big picture game plan is more important than the individual stocks. Like the individual stocks are what I need to have trading ideas, but it's all based around that big picture game plan. That's always the most important thing to me. What type of day is today? Is today a day where I can focus on the entire market? The answer to that for today was yes. Is today a day where don't feel like I have an edge in the market and I really want to focus on individual names and play? Okay, well that's also going to be very telling. Um, so it all starts from the big picture and then works its way down. Appreciate the question. Gilbert saying, I found that dabbling in options gave me new layers of analysis on top of my equity trading, like expected move stuff. Yeah, for sure. So even as someone who does not trade options really, um, I recognize the importance of understanding options. Like I remember when Pat first started, the large order option flow, that's all from Pat. It's all from Pat. I remember, when he was on the physical desk in like 2018 or something, he was like, "Hey, Derrick, I really started paying attention to like this option flow stuff," and he started talking to me about gamma, and I was like, "Dude, what are you talking about?" And and I was like, "Yeah, okay, like whatever, like kind of rolling my eyes. I've heard a million things from a million people over the years, and then I can't believe how important and how accurate it was. And now it's, pieces of information that are hugely important to my overall game when I'm looking at things, when I'm looking at trades. All right, then. Great afternoon meeting. You guys should make the afternoon meeting great because I can just come in here and I can say, hey, look, the market did this and I did this and we were thinking this and this big worked great based on the game plan this morning. But what really makes these afternoon meetings helpful more than anything is when you guys come with solid questions that can help your learning and learning of everybody. So I love that. Keep it up. Oh, you know what? I forgot to check YouTube. So let me check YouTube. I know it's late. Kevin G let me know YouTube is good. It would have been great if I saw that earlier today. Kevin G also asking about Disney. Yeah, we saw Disney early, and I didn't know what was going on with it. Honestly, I think I missed some news. I like Disney a lot above 89. Ripped off the open. I was like, oh, I guess I missed that. And then I saw that it was filling the gap. I called out a long, I think, versus the 940 low. That would have stopped you out if you took it. So I'm going to get stopped out at the low. I didn't take it. And then it totally recovered. It sounded like Pat was kicking himself a little bit that he didn't focus more on Disney today because he felt like there was some good opportunity. I find this finally paid the stock. People ask about Disney all the time. And at a certain point, I think I had mentioned that if it gets down to $80, I feel like I need to buy some of my IRA and forget about it. Just because the value at that price. But whenever anybody asks me about Disney technically, I always start by caveating and saying I hate how the stock trades. Today was a perfect example of it. This thing gave this clean 89 breakout off the open, just to 100% fail, fill the gap, overfill the gap kind of, and then give a V bottom reversal and close incredibly strong. It's so hard to trade. Um, so I don't really keep Disney on my radar for uh hold on, what did you say here? Whenever we have these considerable sell-offs, we'll bounce 40-50% before continuing short. And this is what I've noticed on an earnings play. Yeah, so I don't know. Disney's so hard to trade. This is always my problem with it. It's why I always caveat that it's a really hard stock to trade when people ask me about it. And I thought we finally had a super clean trade in it, and it was still very difficult. All right, gang, that's it. Have a great night, everybody. See you tomorrow.